So Western Gold and Copper is a Vancouver-listed mining company. As I understand, it's solely focused on developing its casino project. And the ambition is to develop this into Canada's premier copper and gold mine. Is that correct?
That is correct.
Yes. So please tell us how.
Appreciate the opportunity, and thanks for listening. I am Sandeep Singh, as mentioned, CEO of Western Copper and Gold. We are listed in Toronto and New York under the ticker symbol WRN, and I will be making forward-looking statements as I provide this update, so please be mindful of that. Today we have a market cap of roughly 350 million Canadian. We are well funded. I describe ourselves as being funded to success, and I'll describe what I think that means. But at the end of the last quarter, we had 77 million Canadian in the bank. We went out to raise $25 million in the spring, and we ended up closing on 50. So have a strong treasury to do what we need to. Also have the strong backing of a really solid institutional investor base. On the right-hand side of this chart, you'll notice some of those investors. We'll talk a little bit about Rio Tinto, who's our largest investor. Mitsubishi Materials would be the other strategic investor. And beyond that, it's largely institutional and a lot of high net worth retail folks who have been with us for some time. Excuse me. I think what I'd start off by saying is, first off, I joined the company about 6 months ago as CEO, taking over from a team that had been together largely for 15 to 18 years. And the casino project, which we're pushing forward in Yukon, Canada, is not dissimilar to many of these large projects where they sometimes go through lulls. And for us and this project, that meant basically the 2010 decade, where over that decade, copper is falling from about 450 to 250, basically in a straight line downward. Not necessarily a good time to have a big project in a junior company. There's not a lot of equity available. And I think the company did the right things, which was preserve value during that period. They raised smaller amounts of equity, did good things technically to advance the project, but it wasn't necessarily getting rewarded in the market. Then in 2020, things changed. Things sped up quite meaningfully. They were able to raise some equity dollars. They raised $28 million in early 2020, put that money to work drilling and expanding the land package, which led to a doubling of the M&I resource, which is now at a stage where I would call it globally significant. World class gets thrown around quite a bit, but I would describe that resource as being globally significant. Took it to feasibility study in mid-2022, so quite current, and along the way attracted those strategic investors, be it Rio Tinto and Mitsubishi. I was looking at this about a year ago when they tapped me on the shoulder to talk about succession planning. I saw a tremendous amount of advancement and still not getting necessarily rewarded to where it should be. These projects, big copper gold porphyries, are very scarce. They're extremely scarce in good jurisdictions, and that's what led me to join the company. And upon joining, I made a significant investment for myself. I bought $3 million worth of stock that day. Let's talk a little bit about those strategic investments. And maybe before I do, I will describe us as a little bit different to what you've probably heard over the course of today, or many of the companies that you're listening to over the course of the next 2 days. We're not an exploration company in the purest sense, although we will have some exploration in our future, but we already have our deposit of significance. We're not looking for it. We're not trying to grow it. We're not trying to find it. It already exists. We're trying to de-risk it, protect it, and ultimately unlock value for our shareholders. You're going to see a project that is not something that is our scale. We're not going to try to build this mine. It's way too big for us. It deserves to be in the hands of some of the biggest companies in the world, but nor are we in a rush to have that happen. There's a lot of value we think we can create along the way. So as I mentioned, Rio Tinto have put money in 5 separate times. Every chance they've had the opportunity to maintain their pro rata stake, they have, and they've put in just under $40 million over the last 3 years. To be at 9.7%. Mitsubishi Materials, and interestingly, or maybe worthwhile to you, they do have a number of other investments in junior companies. There's, I think, 3, 4 in total that we can see. All the rest fall into their Newton silo, which is more of the science project type initiative on sulfide leaching. This is the only investment that leads up to their copper group in London. And then Mitsubishi Materials, this is the first and only time they've ever invested in the equity of a junior company. So they started with a huge screen globally, whittled it down to 10 names that they did significant diligence on. We were one of them, and ultimately we were their top pick. And when they were told that it's too early to talk about offtake and offtake is not on the table, they very quickly came back to us with an equity discussion, even though it's something they had never done in their history and culturally was not something that came easy to them. So all that to say that the project has gone through significant technical diligence by some of the smartest minds in the world from a copper perspective. They not only did that diligence leading into their investments, they've done it since as they're members of our technical committee. And I don't mind saying that along the way, I think they've checked all those boxes, and that proof of that is kind of their continued level of interest. This is, excuse me, quickly the ore body, or not the ore body, the endowment. So we're sitting on 11 billion pounds nearly of copper, 21 million ounces plus of gold. Individually, these numbers are huge. Together, they're quite staggering. So quite a lot of optionality. Endowment is one thing. I'll hopefully prove to you in a slide or two that it's also highly economic, but this is the starting point. A couple other tidbits on this page. I do think this is the right metals mix for the future, whatever your definition of the future is. Coming out of 2 conferences in Colorado, or just general marketing in the mining space, if you ask most investors what are the commodities you want to be invested in going forward, it's some version of copper and then gold, or gold and then copper. So I do think we have the right metals mix for the foreseeable future. I also like the mix in that there's a natural hedge built in there. If you're thinking about building a mine for generations or decades, which is what is involved here, having that natural hedge where sometimes things aren't exactly correlated is a good thing. And then in terms of exits, we do, as you can appreciate, talk to the biggest copper producers and would-be producers in the world. But if you get to a certain size in gold, if you get to a major size in gold, you don't want, but you need copper for growth. And you've seen that with Barrick, you've seen it with Newmont, you've seen it with Agnico to a lesser extent. So I think the mix we have bodes well for us in terms of our ultimate exit. So this one slide with a bit of narration, I think tells a lot of the story. So what you're looking at is a cross-section. Hopefully you can see that, it's not so faint, but that black line, that is the outline of the 27-year pit in the feasibility study. So one big pit in the Yukon. The mill reserve is 1.2 billion tons of 0.4 copper equivalent. So a few things with respect to that. First off, the strip ratio on that one pit is 0.43. So in this type of deposit, you'd be happy if your strip ratio was in the order of 1.5 to 2. That's where most of our peers tend to track. In this case, our strip ratio is 0.43. And in a huge earth-moving operation, having the benefit of only needing to move economic material is fantastic. So whilst our grade, kind of middle of the pack at 0.4 copper equivalent, when you adjust it for the strip, it actually moves closer, if not to the head of the curve. The other thing that's worth pointing out is this is only a third of our overall resource. So we have 3.6 billion tons in resources defined today. So when we talk to major companies, we don't talk, and nor do they talk to us about a 27-year mine life. They talk to us about 60 to 80 years plus. And so that's one of the things that changed for this deposit. If you had looked at it in the last decade, is it was always known as a significant amount of 0.4 equivalent material, but at the time, 0.4 wasn't necessarily in vogue as it is today, not having had the run in commodity prices, but it also probably wasn't enough of it. And that materially changed over the last 4 years. The other thing that changed is that core zone. So those hot colors that you see on the right. So within the reserve, there is 430 million tons of 0.6 copper equivalent. So 50% higher grade, it's almost 50% lower strip as well. The strip is, I would argue, negligible at 0.26. It's sticking out of the ground. It's the starter pit of our ore body, which leads to an exceptionally quick payback. Using 360 copper and $1,700 gold, which you'll hear me say a number of times because it's the baseline that we used in our numbers 2 years ago, which I think obviously quite obsolete today. But even using those prices, the payback is roughly 3 years. In those first 4 years, that core zone generates $1 billion of after-tax cash flow per year. So that combination of payback exceptionally quick and de-risked in that core zone, and then decades, you choose your number of mine life beyond that, That is what makes this project of interest to some of the best names in the copper space. You layer on top of that the metallurgy, which is extremely clean. This has no nasties in it. It's the type of concentrate that everyone covets. It's low elevation, 12 to 1,300 meters of elevation, versus the stuff in the Andes of South America, which can be 4,500 meters plus. Infrastructure picture that's improving around us all the time, which I'll talk about next. And the safety, again, of being in Canada, which is a slow place perhaps to permit a mine, which is the phase that we're in right now, but a fantastic place to have a mine once you're done. And we've seen unfortunately more and more countries get crossed off the list every year in terms of where you can build a mine, let alone a mine of this scale. If you're in a boardroom making multi-decade decisions, multi-billion-dollar decisions, you need to know that your investment is secure. This is just a zoom in of that core zone. So this is drilling that Rio Tinto asked to see, or asked to conduct when they entered the story in 2021. So their locations, their depths, et cetera. So you're looking at almost 300 meters of 1% copper equivalent right from surface, very consistent. 66 meters of 2.5% copper equivalent, same story, right from surface, very consistent. Historically, we have a 700 meter hole almost of 1% copper equivalent right from surface that ended there where we lost the hole. So pretty special part of our deposit, I'd argue, in the copper gold space, in the porphyry space. This part of our deposit, the bottom row here, is better than most of the things that are out there, and it's frankly just our starter project. I'll talk about our economics on this slide, and forgive me, there's a lot of numbers here, but I'll try to make sense of it. So this is the derivation of that feasibility study that I mentioned that was produced in mid-2022. So first off, quite recent. These numbers are quite recent. Secondly, probably the worst time to ask consultants for numbers, peak inflation, where you're asking a set of consultants to give you a forecast. I think there's a inherent bias to build in as much conservatism as possible. That's not to say that our numbers are going to get better or the capex is going to get smaller as time passes on. That's not how capex works, but I'd argue more sticky than most. And it's also not your typical junior company study in that Rio Tinto was already our shoulder for about a year, looking over a previous management's shoulder as this was being developed, making sure that nothing in this would embarrass them in the fullness of time. So just to say that if you look at it as, or whether it's corporately or institutionally, I would say the more people look at this project, the more they tend to like it. In my experience, which includes 16 years of mining M&A at some of the more preeminent mining firms in Canada, typically the more you look at something, the more diligence you do on it, the worse it gets. This is one rare exception in my career. So again, 360 copper and $1,700 gold was the base case. That spits out a 2.3 billion Canadian NPV. 18% IRR, that 3-ish year payback. So really good numbers, and that's one of the things that attracted me to this asset. It works based on conservative, long-term prices. When you fast forward, and we have, I think it's in green there, it's hard to tell, current prices when we kind of published or printed this a few weeks ago at $4 copper and 2,500 gold, you'll notice that the NPV jumps to $4.3 billion. So that's the optionality of this massive resource that not only works at long-term prices, but has huge leverage to rising prices. And again, I think $4 is not the right price to use. I don't believe there are projects out there that work, that are going to get built at below $5 copper. If you're looking at the M&A that's being conducted right now, for instance, BHP's bid on Anglo, which was not successful, I think if you work through the numbers, the implied price there is clearly close to $5 a pound. But point being, pick your numbers, pick your time frame, weave in as much conservatism as you like, and this is a multi-billion-dollar still NPV project, and it's trading today at an enterprise value of about $275 million Canadian. The other thing I tell people is this is still the wrong metric to use for these long life assets. And if you listen to Robert Friedland speak, you've heard him do a much better job of conveying that than I can. But even at an 8% discount rate, which is what we're using here, nothing after year 9 really hits the NPV calculation. It all gets discounted away, implying that it's not worth anything, but I can assure you that those years matter. These long life assets are the type that'll have the same NPV every 10 years for decades to come. So hugely attractive asset, very economic at long-term prices, and the optionality to rising prices is exceptional. This is just another way to look at that math. I think I referenced it earlier. So during the payback period, it's 950 million Canadian of after-tax cash flow per year, and thereafter it drops down to about $500 million of after-tax cash flow per year, essentially forever. If you up that to today's pricing, it's more like 1.3, 1.4 billion during the payback period, and then 700 to 800 million per year thereafter. The infrastructure picture, and I referenced this earlier. This is the other thing that's materially changed for this project from anybody that looked at it last decade, excuse me. The Yukon in Canada, it was infrastructurally challenged. There's not a lot of people in the Yukon, only circa 45,000 people, hence the infrastructure to accommodate those folks. But in the last 4 years, things have taken a marked step forward for us on every level. And it's really been government-led, both federally in Canada and in the Yukon. Infrastructure for us means three things. It means roads, port, and power. So on the road, so you'll notice, hopefully you can notice our Casino Copper Gold project, the logo just above that green rectangle. That's 200 kilometers away from the closest population center in Carmax. Population center there means about 1,000 people. So pretty good place to build a mine where you're not impeding on your neighbors. Does need a road to get there. So that road that you see in green and brown, 80% of it exists, or the 80% of the length of it does exist today. It's a road that's fine for pickup trucks and SUVs, not necessarily concentrate trucks. So our Prime Minister, Trudeau, came to the Yukon a few years ago, made a commitment to build most of that road, part of the Roads to Resources program. So the government has committed 100% of the funding for that green portion, to improve it, essentially expand it and improve it, and 30% of the funding for the brown portion. It's $130 million worth of funding that is to our benefit and on our behalf. The road, to be clear, is a road to nowhere other than the casino project. So that's fantastic assistance from the federal government to get critical minerals out of the Yukon. Announcements from the government are great. Actions rarely follow. But in this case, hopefully you can see the insert there, they've already spent the first 30 million. So they've already started that work. We're having a discussion with them now about where we meet in the middle. They'd like to see us advance through the permitting a little bit further before they do the next phase. That's fine by us. We'd like that road to be in good shape for the first year of construction. This, by the way, is an early next decade type of production scenario, which if you're looking for these big projects out there, unless there's a shovel in the ground today, that's essentially what you're looking at. So that's huge improvement for us. The second would be the port in Skagway. That's Alaska, by the way. They were going through a redevelopment. That's historically where all the concentrate has been shipped out of the Yukon, including up until about 1.5 years ago from Minto, along the same route that we would take. As they were redeveloping that port, the Yukon government stepped in. So this is a small territory, small taxpayer base of 45,000 people, and committed $21 million to the redevelopment of that port in another country. And the quid pro quo is to make sure that there is concentrate shipping infrastructure or ability for the Yukon in that port. That too is the benefit of everybody in the Yukon, but it's only really us coming down the pipe with concentrate that you can foresee. So a huge benefit. And then the last one, and I apologize that I'm shortchanging it because it's probably the biggest, is just on Friday, the federal government committed $40 million to a grid connect study between BC and the Yukon. Our project works on LNG power, but if we can get connected to the grid in British Columbia, our power costs go down by half, and we start producing green copper. This is a huge catalyst for us. It just occurred, and we couldn't be more excited about it.
Thank you for that. Let's see if I can get this working. Yeah, I just like to highlight one thing with a question as well, and that is you have high-profile shareholders, as you mentioned, and apart from the investment. Do they help you in any other way?
They do. It's a really good question. So both Mitsubishi and Rio Tinto are on our technical and sustainability committee. that is more to our benefit than theirs. We have access to the brightest minds in the copper space. They lend that talent freely. So yeah, we have, for a small team, we have the best minds in the business focusing on our project. Importantly, when I joined 6 months ago, what I've seen is they see the project the same way we do. So there are no real discrepancies in how they would push the project forward versus how we would, which is quite a reassuring thing to see coming in as a new CEO.
So you joined with the household name, with the household names, or they joined with you as a household name?
They were already in the company, so I joined them.
Yeah. Anyway.
Thanks so much.
Thank you.
All right.
Thank you, and we'll give you a round of applause.